Good morning and welcome. You are watching Market Cafe on 80 Now. I'm Nupur, and joining me on the show is Meryl. Over the next half hour, we bring you what's happening across the world in terms of how the US markets have performed and what's happening up in Asia. Well, we begin as always with a look at the US stock futures. They are trading near a flat line after major averages fell for the third straight session as a global bond rout and higher oil prices are weighing on investor sentiment. Now, looking at the Dow Jones, the Dow Jones Industrial Average futures have risen by 2 points. The S&P 500 futures are trading in a flat line, while the Nasdaq 100 futures have dipped 0.2% or 0.2%. Now, the Wall Street, of course, is coming off a losing session. The Dow has shed more than 116 points on closing, while the S&P 500 slid 0.7%. The Nasdaq Composite, which dropped 1.3%, the biggest laggard of the three tech stocks, dropped as bond yields in the US and elsewhere have scored fresh milestones. Now, the 30-year bond yield, Treasury yield, has notched up a new 19-year high, while Japan's 10-year bond yield has reached its highest level in about 3 decades now. AI-linked chip makers suffered steep losses, including Micron, lost about 7%, Sandex down, Nvidia also trading in the red, Intel also, and so is AMD. Now, investors will be awaiting and watching out for the minutes from the Federal Reserve's July meeting, along with earnings reports from major retailers. Those include Target, TJX, and Lowe's.
Right, and if we take a look at how the crude oil market especially is playing out today, then oil prices seem to have ticked higher in trade. They've been climbing for the fourth straight day on the supply uncertainty coming in from the whole West Asia developments. Investors are now weighing conflicting messages coming in from Tehran as well as Washington on whether the Strait of Hormuz is open to ships. A temporary ceasefire agreement that did expire on Monday, along with a senior Iran official telling media reports that the country was moving to a fully offensive military position due to the diplomatic stalemate. So all of these are really putting that pressure on the oil markets that we're seeing right now. Brent crude futures climbing up to 0.3%, reaching up to $91, while WTI crude is also up about 30 odd cents, reaching $85.31 a barrel. But similarly, if we take a look at how the Asian markets are faring up, then the Nikkei 225 index seems to be plunging again, with the broader topics index also in decline. Japanese shares seem to be sliding for the second consecutive session, with a broader sell-off seen in semiconductor as well as other technology stocks as well. Local equities are also seem to be tracking losses, with AI-linked chip makers coming under heavy selling pressure from these geographies. There's also KOSPI, which is also trading in the negatives. That also seems to be extending losses from the previous trading session amid a global bond sell-off, which seem to be weighing on investor sentiment worldwide. The global tech sell-off is also hit the Korean exchange. Samsung Electronics, SK Hynix all seem to have fallen in trade about 6 and 7 odd percent as they track the losses seen in the US tech stocks as well as the Japanese and the Korean tech stock, all seeming to go in tandem, facing severe losses in the last trading session.
All right, now turning our attention to what's actually causing so much disarray in the markets. The US President Donald Trump says that there are no talks scheduled with Iran, marking another setback to hopes of a diplomatic breakthrough. Now, Trump has also claimed that the Strait of Hormuz is open and all mines have been cleared out, though US Central Command has not confirmed that claim. Shipping through the key oil choke point remains severely disrupted. Trump has again floated the idea of making Hormuz US territory, despite experts saying that it would violate international laws. Meanwhile, 2 Iranian ballistic missiles were detected heading towards the UAE, adding to regional tensions.
US industrial production rose in July but still came in slightly below what was expected, while factory outputs have matched forecasts. Capacity utilizations also came in exactly in line with what was estimated, and the data gives markets quite a fresh reading on the health of the US manufacturing space. And this will also be closely watched for signals on the strength of the economic activity overall.
Now, the US long-term borrowing costs have hit a fresh milestone with the 30-year Treasury yield briefly topping 5.33%, its highest level in 19 years. Investors are increasingly concerned about America's widening fiscal deficit, persistent inflation and rising oil prices amid the West Asian tensions. The US fiscal deficit jumped to $432 billion in July, taking the year-to-date shortfall close to $1.8 trillion. Now, the 10-year yield also remains elevated near 4.71%, keeping borrowing costs across mortgages, loans and credit markets under pressure.
Trump and Canadian Prime Minister Mark Carney are in talks just hours before the new 50% US tariffs on around $20 billion of Canadian imports are going to be taking effect. Now, these duties target products including wine, dairy, furniture and hockey equipment as well. These could be hitting Canadian businesses already facing weaker orders, with the tariffs now being imposed under the rarely used Section 338 of the 1930 Tariff Act. Business groups are warning that the move could disrupt supply chains and raise costs for American consumers while putting millions of jobs at risk.
Unitary Robotics is making its Shanghai debut after raising $904 million in China's largest recent bets on humanoid robotics. The IPO values the Hangzhou-based company at around $8.5 billion, with retail investors subscribing more than 5,500 times. Unitary becomes the first publicly traded humanoid robot maker in mainland China, as Beijing is stepping up support for embodied AI and physical robotics.
Meanwhile, South Korea's President Lee Jae-myung is renewing calls for greater military independence after Trump has ordered a substantial reduction in joint US-South Korea drills. Lee wants Seoul to accelerate the transfer of wartime operational control of South Korean forces from Washington and speed up its nuclear power submarine program. This move is coming as Trump signals warmer ties with North Korean leader Kim Jong-un and is reportedly pushing for another meeting this very year.
And Anthropic is preparing to expand its revolving credit facility beyond $10 billion as the Crore maker gears up for a potential IPO as early as this autumn. The facility would be more than 4 times the $2.5 billion line secured last year, with major global banks competing for a role in the listing. Anthropic's annualized revenue run rate has surged to $65 billion, while the latest quarterly revenue has topped $11.5 billion.
And back home, the government has announced the National Sports Awards, with 17 sports persons selected for the prestigious Arjuna Award this year. The list features athletes from disciplines including athletics, badminton, boxing, chess, hockey, kabaddi, shooting, and also para sports. Now, with the key big names from these being Vidit Gujrati and Divya Deshmukh for chess and Gayatri Gopichand for badminton. However, notably, there is no recipient for the major Dhyan Chand Khel Ratna Award this year, which hasn't been announced yet. The Arjuna Award has also been given in the Lifetime Achievement category to footballer I. Arumanayagam.
Well, time for a very short break here on Market Cafe. When we return, we're going to be taking you through what's expected in the Indian markets and the stocks that will be in news. Stay with us. Thank you very much for staying with us on Market Cafe, and we now turn our attention back home and to the controversy surrounding the E10 fuel. Now, a day after the Chief Economic Advisor, V. Anantha Nageswaran, made a case for bringing back E10 petrol for older vehicles, sources have told ET Now that supplying E10 fuel at retail outlets would be difficult for the government. Prakash is joining us with the details. So good morning, Prakash. Tell us more, please.
Well, that's an important development coming in, as government sources suggest that providing E10 petrol at retail outlets would be practically difficult, as it is likely to pose significant logistical challenges for all marketing companies. Sources suggest that offering multiple grades of blended petrol at retail outlets would increase the financial burden on all marketing companies, as managing separate storage, transportation and pipeline infrastructure would attract additional cost, and this is going to be very difficult for all marketing companies to manage different grades of petrol at retail outlets. Along with that, you are aware of the fact that the Chief Economic Advisor has proposes reintroducing E10 petrol at retail outlets alongside E20 petrol, especially for older vehicles amid ethanol-related controversy. However, government sources are suggesting that this is not going to be easy. In fact, it is likely to pose significant logistic challenges for all marketing companies along with financial burden. Sources also suggest that providing different grades of petrol could also lead to malpractices. In fact, the idea of offering different grades of petrol at retail outlets was widely discussed during the launch of E20. Various factors were taken into account, and the practical and logistical challenges were discussed extensively. However, sources have reiterated that E20 petrol is completely safe and was implemented after years of testing. Back to you.
Right, that's the update coming in from the E20 fuel space. But switching focus back to the markets, major block deals are in focus today. Paytm saw the biggest transaction as Resilient Asset Management sold shares worth nearly 3,000 crores. We have on board with us Avi to give us all of the details from here. Avi? Take us through that.
So let's have a look at all the block deals that went through yesterday, and a lot of them are buzzing, could buzz today in trade. Starting off from Paytm, so Resilient Asset Managers sold stocks worth around 2950 crore rupees, which is a big amount, reducing their stake from 10.2% down to 7.2%. Vijay Sharma, along with Resilient Asset Managers, now hold around 16.2% stake in the company. So that is a big block deal. The major buyers in the block deal were SBI Mutual Fund with around 830 crore rupees, Goldman Sachs with around 350 crore rupees, and other buyers included HSBC Mutual Fund, ICICI Prudential, and Sundaram Mutual Fund. Next up is Billion Brains Garage Ventures, which we all know is as Groww. So YC Holdings sold around 7.246 crore shares worth around 1435 crore rupees in Groww, making it representing a stake of around 1.19%. YC Holdings held around 8.63% stake as of June 2026. So a big block deal went through in Groww as well. Up next is Zaggle Prepaid. The stock will definitely buzz in trade today, as Mr. Vijay Gedia bought around 1.49% stake in the company of around 20 lakh shares at 164 rupees per share, representing a 33 crore rupees deal size. So definitely stock will buzz, as the stock had fallen around 20% after its Q1 FY27 earnings. Talking about the next stock, Cyient HDFC Mutual Fund sold around 5.32 lakh shares at 854 rupees per share, which represents a 0.5 stake% in the company. This deal was worth around 45 crore rupees, so Cyient could see some selling pressure. Up next is Welspun, in which Lloyd Enterprises bought around 97,000 shares at 1790 rupees per share, representing a 17.47 crore rupees worth of deal. So Welspun Investment saw block deal by Lloyd Enterprises. So these were the stocks that saw big bulk and block deals went through in the trade yesterday.
All right, and in fact, infra stocks are also in focus after Maharashtra cleared two major connectivity projects worth more than 28,200 crores. Now, the state has approved the Metro Line 13 connecting Mira Bhayandar and Vasai Virar, and a 10,500 crore Pune Ring Road extension, including a 2-kilometer expressway. Now, Avi is continuing to be with us. And Avi, take us through the stocks that could see an impact of this today.
So as you rightly mentioned, the government of Maharashtra has approved projects worth around 28.2 thousand crore rupees, which is a big amount, of which around 17.7 thousand crore rupees have been allotted for the Mumbai Metro Line 13, which will be connecting Mira Bhayandar with the Vasai Virar. So that is a big thing. And up next is 10.5 thousand crore rupees of road project for the Pune Ring Road extension. The companies likely to benefit from this approval are L&T, Kumar Infra, and NCC for the road projects. And while for the Mumbai Metro Line 13, the companies likely to benefit will be Titagarh Rail Systems and BEML, as both of them make metro coaches. Some of the details for this project: the aim is to strengthen the urban infrastructure and improve mobility across the key economic centers. For the Mumbai Metro Line 13, it will be spanning across around 25 kilometers, of which 21 kilometers will be elevated and the remaining 3.5 kilometers will be underground. They are expected to carry around 4.5 lakh passengers per day by FY31 and reduce travel time by around 50% for the given distance. Some of the details for the Pune Ring Road is the fact that they will be reducing traffic congestion while improving connectivity, and the section will also include a 32 kilometers expressway. So the company is likely to benefit remains Kumar Infra, L&T, NCC, Titagarh Rail Systems and BEML for projects approved worth around 28.2 thousand crore rupees by the government of Maharashtra.
Got that. Thank you, Avi, for taking us through all of those details. And another stock that is definitely going to be in focus today, that's Jubilant Ingrevia. The company is making a strategic entry into the electronics development and manufacturing space, with the company set to acquire a 40% stake in Zeta One Technologies for a consideration of up to 190 crores. Now, this deal will be making Zeta One an associate company, and it will be completed in 2 tranches. The first to be completed by November 2026 and the second by September of 2027. Now, it is an electronics design and manufacturing platform which has got capabilities spanning R&D, design, prototyping, manufacturing, assembly, and also box build. Zeta One caters to high growth sectors including aerospace, defense and semiconductors, as well as automotive, medical and industrial applications. So what we're going to see as an impact coming in for Jubilant Ingrevia is the strategic significance of this deal is very important. The company has already got a presence in high precision semiconductors, chemicals, as well as CDMO. And now this new acquisition is going to be giving it an entry point to go into the electronics developments as well as the manufacturing or the EDMS space. Now, the potential synergies coming in from Zeta One's experience in high speed and high power PCB design as well as manufacturing, which when combined with Jubilant's existing global customer relationships in semiconductor chemicals and CDMO, gives the company quite an enormous opportunity to be able to capitalize on. So what they're going to be doing now here on out is build an integrated offering across the electronics and semiconductor value chain. In fact, in the last con call as well, Jubilant Ingrevia's management highlighted that they do have some revenues already coming in from the space. They were previously present in the semiconductors chemical space. So this is going to be quite an interesting add-on for the company to be able to provide even further services from here, and especially in such a space which is so booming and constantly in news because of all of the developments coming in this very high potential space. So it looks like this is not just a diversification move for Jubilant Ingrevia, but they're going to be deepening their presence in the semiconductors ecosystem as a whole. Could be a potential re-rating trigger for the company for sure.
All right, now Swiggy, of course, is back in focus on the back of key decisions at its annual general meeting. The shareholders of the company have approved a proposal to become an Indian-owned and controlled company. This approval caps aggregate foreign ownership in the company at up to 49.5%. Snehi is now joining us. Good morning, Snehi. So do tell us what this could mean for the company.
Well, yes, good morning. Swiggy is going to be in focus on the back of a very major update coming in because the shareholders of the company have approved capping aggregate foreign ownership at 49.5%. At their AGM held on August 18 yesterday, the shareholders approved special resolution to alter the company's articles of association with 93.97% votes in favor. Remember, the same proposal in the month of May had received only 72.36% approval, falling short of that 75% threshold mark to make it pass. Now, this approval is very central to Swiggy's renewed push for an IOCC status, that's Indian owned and controlled company status. This move is particularly important for Instamart. Just a quick brush up on why Swiggy wants to become an IOCC in the first place, because once Swiggy becomes an IOCC, it moves from a marketplace to an inventory ownership model for its Instamart platform, and this will give it better ownership, inventory, better costs, cheaper sourcing, better margins and operational structuring opportunities. Swiggy had earlier said that this transition to ownership from marketplace will take about 2 to 4 quarters from approval. So we'll be watching out for the timeline. Just a quick reminder on why this vote did not pass in May, because shareholders were concerned about too much concentration of board at the top, because more board nomination would be required for Swiggy to become an IOCC. What's next is Swiggy will remove legacy board nomination rights held by Axel and SoftBank. Harsha Majeti, who's the owner and founder of the company, will be able to nominate one member of Swiggy senior management to the board. Co-founder Funny Kishan Adipelli will also be able to nominate himself to the board, although these rights will not have any veto power. Shareholder approvals, they were a key roadblock to its IOCC ambitions, and the company, remember, has still not obtained the IOCC status. This is just a step towards that.
Absolutely. Swiggy is also going to be an important one, therefore, to watch out for when we get to trade today. But with that, we're completely timed out on this edition of Market Cafe. From me, Nupur, and the rest of the team, thanks for watching. But do stay tuned to ET Now for more market updates coming your way.